Groupon CEO Andrew Mason wants to be the next tech darling. Well, Stephan Paternot was one before Mark Zuckerberg was even in high school. He knows the twists and turns of the IPO roller coaster all too well. Back in 1998, he took his company, the Globe.com, remember that? Public with the largest IPO in history. Less than 2 years later, the stock price plummeted close to zero. Steph tells that tale in his book, A Very Public Offering. Steph is now an angel investor providing seed capital to internet startups. He's with us via Skype early this morning from Los Angeles to talk about the Groupon IPO. So, Steph, you know what it was like back in the late 1990s. Is the same thing happening now? The drumbeat for the Groupon IPO, now that it finally got going, started about a week ago. Bankers dribbling out this information about how things were going better than expected. Today, we hear that, in fact, the subscription is closed. The book has been built. You can't get any more of those shares. Is this banker manipulation, or do you think Groupon's the real thing?
I have mixed feelings about it. I tend to think what's going right now in the market is a lot of excitement. However, I think this is fundamentally different than what was going on in the late 90s, primarily because most of these internet companies now have huge revenues and in most cases have profits. And secondly, because most users nowadays have actually used the internet, used the products, and they know what they're buying into. So I think you have a smarter pool of buyers out there. I think Groupon has its challenges ahead. I mean, people are questioning how the revenues were accounted for. That said, I think they have created a new market. There's a reason why there are hundreds of new competitors and copycats around the world. It's because they've really found something interesting.
Steph, how do you compare Groupon to Amazon? Because we've heard that throughout their pitch.
Well, I think the only real comparison is from the type of criticism Amazon was getting back in the late 90s. And I remember Jeff Bezos pretty much famously telling people, look, if you can't stomach the idea of a business that has smaller margins and costs an enormous amount of money to build the infrastructure, then don't buy our stock. And I think Groupon has some of that same criticism. That said, they're still growing. They've decided to listen to the street and cut back some of their marketing expenses and get to profitability faster. And therefore, we're seeing a little bit less growth rate. And of course, now people are criticizing the growth rate.
Well, Steph, though, Amazon built a business model that has proved difficult to replicate, perhaps just because of their sheer scale. The same thing hasn't happened with Groupon. Groupon has proved, if anything, that their business model is simple to replicate. The barrier to entry is very low.
Absolutely. I think here you don't necessarily have the same benefits that Amazon had. I think here that it is a bit more of a one-trick pony, and Groupon's challenge will be to truly innovate. Now, I happen to believe that when companies go public, it is the beginning of the end of true, bold innovation and risk-taking, because the street really only rewards good short-term profits. So I think Groupon will have its challenge ahead.
Steph, good to see you here this morning. Stephan Paternot, co-founder of the Globe.com. He's the founder of Actarus Funds. He's an angel investor, early seed man for tech companies, and has some pretty interesting views on Groupon. Good to see you, Steph.